Hey everybody, and welcome back to another video. In today's video, we're discussing everything to do with the markets around the world right now, including our thoughts on the S&P 500, Nasdaq, crypto markets, gold, US oil, and more. A lot's been happening. We've seen some big corrections, and now we're starting to see some people buying the dip. Is it Wall Street? Is it a big trader? Or is it just retail? We'll be answering that and more in today's video. Stay tuned, guys. This is sure to be a good one. Okay everyone, and this begins our market recap for the markets closed 6th of December 2021. And if you enjoy markets around the world right now, then please remember to smash that subscribe button and give us a thumbs up as we go in big detail into all of the markets on the daily, 5 days a week. Let's move through Microsoft, Amazon, Apple. All these FANG stocks were up. Disney also recovering off its recent slump, and Tesla sold off but then recovered into the end of the day. We'll be taking a look at this one because I think a lot of you will like the zone that it's sitting at and some of the price action that was going on around it. But let's now talk about the indices. What happened? Well, Wall Street did the standard thing. They basically bought through the day and took it straight into resistance, and that was where the rally ended. So we're at a key point of resistance with a double bottom formation happening, and if you're not sure what that is, we'll be answering that later. And every one of the markets was up. The Russell 2000 was doing the best, 2%. The Dow Jones, surprisingly, 1.87%. You'll see why. S&P 500, 1.17%. And the Nasdaq, the weakest of the markets at the moment, with a 0.85% rally. When we go and have a look at the sectors, it was all about consumer staples. That's a bit weird. So we had some defensive sectors going up. Consumer staples, water resources, utilities. These were the ones that were doing the best. Healthcare, not so good. And biotech, of course, led by the Moderna crash there, 2.1% down on the session. But let's get into actual market analysis and talk about exactly what's going on and why it's happening. So firstly, the VIX. This is the fear index or the volatility index. And a lot of people don't really look at this necessarily correctly. It's based on, of course, options price. And in this case, we really look at the VIX as a bit of an understanding of when markets are out of control and they're moving very quickly. And then we have to allocate a different type of trading style to them. In general, my belief, and a lot of people in the community's belief, is when you get above 20 on the VIX, you really should probably shut down in some ways on your swing style trading, because swing is really based on a technical style on the larger time frames. Instead, investors come out looking for, of course, that BTD, the buy the dip kind of scenarios. You've got scalpers that really have a good time in these types of markets, a lot of fake outs and ways you can take advantage of that. And day traders also come in and do quite well during these periods. You've got to be nimble and relatively quick in the markets. So the VIX has come straight back down. It's trading now around 27.19. What our expectation is for the VIX to get back up to these types of levels, it doesn't just have to go down to where it was during the Friday lows, but it actually has to break through those. Because remember, the VIX works on knowns and unknowns. If something new is happening and the algorithms see a new break of a key support in the markets, often that will spike the VIX heavily. But if it just goes back down to where it's been recently in recent weeks, it doesn't tend to have as bad an impact on the options. So remember, it's more about that fear, more about that volatility. And at this stage, it looks like it's declining. Let's have a quick look at the 1 hour chart as well. Some people brought up that it's in a bit of a trend. So their thought process was that they were looking at it from a trend line perspective. Look, could be valid, but really with VIX, I see it more as using horizontal supports and resistances are the best. But this is what a few people brought to our attention. We can bring it up if we'd like to, and you can take with that what you'd like. Let's move over to gold. Now, gold is, of course, seen as a huge hedge in the stock markets, though it isn't necessarily that good anymore. And many people are talking about Bitcoin and, of course, crypto being the new partial hedge against the economic, I guess, printing of cash in some ways. And that is what we'll be looking at later on in the video, because Bitcoin is making a resurgence after its crash. And it's at a pretty important point. I think this closure above 50,000 right now at the time of recording is a fairly big deal. And we'll show you why. Gold here, still sitting around the same zone. We go to the weekly analysis from our previous video, and we can discuss exactly this, which is the long leg doji, the low, the high, the indecision. We really would need an 1810 to show us the way forward in terms of strength, and we're trading around that 1779, 1780 area. It is in its seasonality, so the last 3 to 4 years we've seen December, that first week to second week of December, pick up gold and have a rally through that period. So if we do start to see rallies, let's say it goes above the 1810 level, that will be fairly significant. And a lot of people have asked me, but what about this 2-hour chart? Do you think that's a lightning bolt? Trough, peak, higher trough, higher peak. This is often seen as a change of trend. I do think that, but I still think that we're at a point where it's more indecision than anything else. Previous supports becomes resistance. There's no clear, strong breakout yet. Maybe if you get above here, day traders will come in and try to push it towards 1810, and that might be something you're interested in, but gold still really trapped. US oil, on the other hand, looks a lot better. So this is way better of a base. We've formed a low, kind of like a max pain type of concept here. And then we've seen, of course, a recovery. Now, some people are calling it left shoulder, head, right shoulder, as in a inverse head and shoulders and a breakout of that neckline. Some people will call it Wyckoff accumulation because of this maximum pain and the quick rebound of that. It really did probably take out a lot of people's stop losses underneath here. However you want to look at it, the price, the accumulation, the base is looking so much better here on US oil. And to put it in perspective, let's move it over to the weekly. So the weekly here shows us the previous resistances. These are all the zones that previously were kind of like a zone of selling. We see support, support, resistance, resistance, all the way across this line. Such an important level, even previous buying in only a few months ago. Now, this is significant because we have, again, a long leg doji, a low, a high, an open, and a close, showing us that the market is really considering our green box level down here. And then when we scroll down to things like the 4-hour and the 2-hour time frame, does that look like a partial breakout? Yes. And this is big because we've had consideration, we've had some days trading down in these levels, and the market said, you know what? I think we might be moving back up. We know that OPEC's coming out at the moment and saying lots of things that are trying to get this market bullish again. We obviously know that many governments around the world are trying to keep oil low. It's a war between each one of them. But in general, who usually wins? OPEC does tend to do quite well. We've got that daily 200 just in front, but this is one of those ones that I expect some traders to look for scaling opportunities. And I think the big resistance here will be around that 75.30 area. So this is going to be the next zone if we continue to see buying over the next 24 hours. Oil looking a lot better than some of the other charts right now. Let's move over to Tesla. And I told you guys you might be excited about where it's at. $1,000. Now, if the market holds up, we've had support at 1,000, support at 1,000. Again, nice indecision candle with a closure out leads to some great day trading opportunities. And then what have we got here? Well, looks like a bullish hammer. So that's a movement down throughout the day, followed by strong buying around that 960. Doesn't really matter exactly why it's found buying at 960, but there has been buyers, and it's closed and opened basically on the exact same level, right around that 1,000 on the 50 moving average. Now, if you get follow through action and it goes to a new high here in the next session, that'll be the Tuesday session, this leads to further buying momentum. The algorithms start to get involved. And when we break down the smaller time frames, you'll see what I mean. There was some buying here. It's then rallied underneath, taken out some stop loss, come back, and we're looking for that confirmation above. And then hopefully day traders using their systems will be able to find some kind of momentum through the session. So what do you guys think? Are you interested in Tesla at 1,000, or are you looking for it to move back down to that 900 low? Let us know in the comments down below. Super interested to see your thoughts. Let's move over to IWM. IWM also starting to look a little bit better. We've got the first stage of recovery here. We've had a little closure above the 2-hour 20 moving average. Now we know this moving average has held IWM all the way down. 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, and finally a little closure above that area. But we still have a few other things to contend with. The double bottom. And this resistance, the 220 area, is super key here. If you take a look at it, you can see the double bottom. You can see how that will be the stage of recovery. And when we go out to something like a daily, it makes a lot of sense because this is exactly where it previously has rallied several times over. Around this 212 area, you've seen strong buying. It's a pretty undervalued index in the market in comparison to what we're seeing on the Nasdaq and the S&P 500. And when the Russell gets ready to go, it reprices, or it tends to reprice quite quickly. So if you have a look at things like the weekly, learn from that left-hand side, it tends to go on pretty epic rallies like it's done recently and in the past during these rally periods. It breaks out and then it goes woohoo and it moves up and out. And that's good, but that false one that happened recently was a bit frustrating. So there is a bit of action here that can happen in IWM. It kind of reminds me of the Netflix chart, if you want to go and have a look at the Netflix chart. And the 2 hour is certainly looking much better with this movement of the double bottom. Let's move over to the major indices now. Nasdaq was rallying through. We mentioned this exact resistance acting as support, though it wasn't really the Nasdaq that we were super interested in. It was actually the S&P 500 that had the better, I guess you would say, technicals on it. And the Nasdaq still suffers from a few problems, notably the inverse or the head and shoulders here, the left shoulder, the head, and the right shoulder. If you're coming in and you're looking at price action, this is where you start to say, okay, we expect Wall Street to start selling off this particular index. And while we always remain optimistic, this is really that zone where you expect it to happen. Now, if it doesn't happen and it blasts straight through, false breakout, it didn't go the full distance. And I've warned against this a lot of times. Bear patterns, such as head and shoulders and even double tops, they often don't go as far as you think when they're going against the overall trend. And we always have to think about what's the market telling us. Well, the market in general is always saying, be bullish, be optimistic, because that's what generally does happen. Being a bear is difficult. You can get some great runs on it, like we've seen here. And this is the bottom of our trend line. If the worst case happens here, that we believe the trend line could be hit. But we also need to pay attention to the price action. So the current price action is saying, okay, be cautious. And if it doesn't turn at this green box area here, then all of a sudden we're looking at a resumption of the bull trend into the Santa rally. So this is a pretty interesting chart, but I think where we really get super interesting is actually the S&P 500. And here's the S&P 500 from the perspective of the SPY. This is exactly the zone, 450. There was a lot of puts there over the next 2 weeks worth of expiry. And we don't expect that that's going to be the easy area for the bears to crack. Now, if they get underneath this zone, welcome to some serious pain, because if the weekly closes below there, that will be the first time really since the pandemic beginning that we've gotten underneath this moving average. This is the 20 moving average here. The 20 exponential moving average, such a key moving average. Everyone's been buying that one. That's been one of the key biggest points of interest. And we saw that buying come through. It was why we had a suspicion that Monday would be bullish. Now, what's going to happen for the Tuesday session? A lot of people are asking, and this is where it comes down to reading the Tuesday session. If we look at the close, let's get rid of this line. Get rid of that right now. The close happens just underneath where the wick is. And I think the SPX, rather than the SPY, probably cleans this up a little bit more. So here's the SPX. It's the same market, obviously just not the exchange traded fund version. We have here the low. We have the low, again, buying pressure, 4,500, key level. We've hit the resistance. We've almost broken through this trend line by the end of the day. We'll have a look at the daily in a second. And then we've reversed and come back down to the previous close. So exactly where you would expect it to have a little bit of problems. Now, in the next session, if we see buying pressure and it makes a new high, what do you expect to do for that to do? Probably continuous rally. And that is going to be one of the really big signs of, okay, this dip has been corrected now and we're moving towards a bullish market again. At the same time, we're going to have IWM, the Russell 2000, most likely breaking that double bottom resistance. We're going to have the S&P 500 doing it. And while the Nasdaq's weaker market for sure, in terms of just pure technicals, if it comes through, then it will also bull, you would think, into those zones. So this is such a critical point, and it's done everything we've suspected so far. Found the 4,500, found the weekly, bounced off the weekly, and for the bears to win, they have to smash this straight down. And boy, oh boy, if they get underneath this level, well, then we're having a very different discussion. But this is how it is in trading. It's day to day. We're looking at it all the time, and we're hoping to see further movement through this zone, because that's going to be one of the most important areas for people to be looking at in the market. We had the 38,250 pullback. This is one of our favorite fib pullbacks. We had the central pivot. There was a lot of reasons why we like this 4,500 zone. And now we look towards that closure above. And if we get that closure above, well, all of a sudden we're saying, okay, the correction is done. And most likely from a technical perspective, the rally is coming through. And you can see why as well. Look at this daily 20. The daily 20 moving average, it would be getting above that. It would be getting above the downward trend line. It'd be creating a double bottom. many different reasons. Bears, they got to control it the next 24 hours, get it back down, get it under 4,500, and then, wow, they'll be having their way. That'll be the first proper crack of the 20 that we're starting to see since the pandemic, and that'd be a big deal. I tend to believe, this is my personal opinion only, that correction is coming in 2022. And I don't think we're going to have an epic crash through 2022, but we will have a 10 to 15% correction. Most people seem to believe that. There are some people on the street now calling their 2022 predictions, and they're so far saying 5,000 is their prediction. Now, I always love this time of year because you get JP, you get Goldman Sachs, you get all of these guys coming out and giving their predictions. I will randomly throw in a prediction later on in the year if you want to see where I think it's going to be going. But I've seen 5,000 so far, with a chance of a 10 to 15% correction, but by the end of the year being 5,000 coming 2022. And that would be a very healthy return for the market, still a very good return as a raw percentage, but it's slowing down and people know that it's slowing down. It's not going to be this 10 to 20% anymore. It's going to be more down that kind of 6 to 10% return. And that's more of a standard year versus insanity. And if insanity ensues continuously, we know that we go into an epic crash bubble, and that's not really what most of us want. And some people already believe we're there, but look, time will tell. What do you think that it's going to be next year in 2022? I'll ask this a few times, but put your predictions for the S&P 500 2022 close December 31st. I'm very interested to see what everyone thinks about this one. So we're looking for the daily 20 plus closure out. That'll break and snap pretty much this downtrend, and we should be able to hopefully move higher after that point. Maybe the Christmas rally will come. Let's talk about Bitcoin. So Bitcoin has some positive signs on it all of a sudden. We have just broken through the previous resistance after that massive flash crash. We created resistance, and I put this in the live stream. I talked about the rally that's going to come off this. 49,670. We had a long leg doji. We had some rejection candles. We've rallied down, and then we've just slammed through that point. So I think this is a big deal for Bitcoin. Moving back above is showing some consolidation and showing that the buy the dip kind of guys are out there. People are finding some value here and starting to push it up. The next big key area seems to be around this just under 54, where we have previous support that could act as resistance. So this will be a big zone, and you can see on the left-hand side, it's also been a bit of an area. I think that's probably the big zone here for now, and we'll see how that happens. If it rallies up, sells off a bit, moves through, again, another bullish sign for Bitcoin. We'll watch it on this channel every day this week, don't worry. Another reason why I think that Bitcoin is doing well is the nasty whales that have been destroying many retail traders. They've been eating the plankton, the krill, which is us. They have turned around BTC shorts. So they started adding to their shorts, and we reported on this last week. And it's always a time you got to be a bit scared when they start really adding to their shorts. And then they've now started dumping their shorts, which is a positive sign. They've done this before. When they've added to their shorts, they've then started dumping, and that's usually resumed kind of this idea of the dump or them dumping those short areas. It doesn't tend to be, I guess you would say, fake. When it turns around, it usually is a real turnaround for quite a few sustained days. So yeah, the rallies and also the dumps tend to be very, very accurate when it goes with the price action. Let's move over to ETH-BTC ratio. Ethereum still doing super well here. We really have been on board the Ethereum train here for a few months, or what is this, about a month now. Ethereum just showing so much more strength than Bitcoin in terms of the overall ratio. We had that breakout of the downtrend, the double bottom, kind of looks like the market right now in some ways. Then we had that rally. We broke through the previous resistance, and we're continuing to rally at this stage. So Ethereum does look better on the charts, and you can just see it. Look at the rally. Look at how fast it recouped that money. Right now, it went to a low to movement up, and it recouped 24%, which is better than a lot of the crypto market has. And it shows you the strength can be seen in the ratios. And often we get people coming into the channel and they'll say, Tom, what do you think of this? What do you think of that? And I'll always say, go back to the market capitalization size, go back to the ratios. It's one of the key things in trading. It's like sector rotation in the Wall Street markets. Really, you're looking for that money movement flow. When everyone's hot on something, maybe you should be getting a little bit fearful, like Warren Buffett says, and a little bit cold on it. And then when you see those ratios start to switch, we've seen it before plenty of times, They call it alt season. They call it big alt season for a reason. And it just tends to happen. So yeah, Ethereum doing much, much better over the last 24 hours. And in fact, weeks at this stage, really holding that 39 4K level, moving back up. And we're looking now for a break of 4,800, hopefully in the next couple of weeks. Thanks so much, guys. If you've been enjoying the videos, please remember to subscribe, smash that like button, and we'll see you in another video on another day. Bye for now.